Hello and welcome to the Voodoo video for Monday, July 28th. This is David, and let's start digging into the S&P 500 where we have some mixed messages from the market here. And so we have to keep some competing ideas in our heads. Right. And some of those competing ideas are the fact that we're in an uptrend, but the market is stretched and or at least appears stretched and could be due for a pullback at any time. Yet at the same time, there's no sign that that pullback is imminent. So let's walk through these elements and then talk through how to process them in our trade decisions, especially on a week that's going to be that's got a lot of news, both on the earnings front and the econ data front. Right. So first off, we're above the Voodoo fire line, right? The fire line back here at 59.25. These are the most important of the Voodoo line levels. We can see that we have tested this from above, pulling back to it from above and holding and making higher highs. That in and of itself has longer term bullish connotations. Add to that, what we've seen over the last 3 trading days is the index establish itself above the Voodoo snow line, right? This is the 6360 level that we climbed above and closed just above here on Thursday, built upon that on Friday and again today, and we have, at least on small time frames, we'll look at it a little bit later, we have tested that snow line from above and held. So long as we are able to continue to hold that snow line, the short-term focus will be up towards yet higher and higher levels. But as I mentioned, we have to keep some competing ideas in our heads. So even though we are up at new all-time highs, not everything is rosy. So one thing to notice is that we have made new all-time highs intraday for the last 4 trading days. Right, that's from last Wednesday onwards. But each of the days since last Wednesday has come with this blue cumulative breadth line at a lower level. We're going to see the market as stronger if we are making higher highs in price and simultaneously making higher highs on in the cumulative breadth line. That what that's telling us is that while not every day since has come on negative breadth, the net breadth has been negative, right? So last Thursday, new all-time highs on negative breadth. Today, on negative breadth. Friday was positive breadth, but the negative days have outweighed the positive, and that has this blue line at lower levels. Now, that can be reversed, but it's one of the things that you want to keep an eye on to see whether it is reversed or not. Right? That is, can we have a day or two of pretty strong positive breadth that takes this back up again? Unless or until it does, it's a warning that perhaps this move is late in development. We can also see that in the last 2 trading days, our big picture oscillator has crawled back up into overbought territory. It is only very slightly overbought, not very overbought, as we've seen, a few months ago, leading to some pullbacks along the way. But all of this is suggesting that maybe we could get a pullback that takes us back below the snow line, perhaps even to retest the fire line at some point. And those aren't the only warnings that things might be stretched, right? If we come in here and look at where we are with respect to our Keltner channels, we are at the 3 ATR Keltner channel above the 21-day EMA. That is very stretched, and we tend to have trouble getting well beyond that. Now, can we keep pushing that 3 ATR Keltner channel upwards as we did back through here and did back through here? and grind our way upwards? Yeah, we can, but we are susceptible to a pullback towards at least that 21 EMA, which right now is down near 62.65, really sort of at any time. At the same time, none of these signs tells us that a pullback is imminent. There's some other warnings on here, like the low put call ratio and a very low VIX, that if and when we do get something that spooks the market, that the move down could be sharp, but again, nothing that tells us that it might be the result of any of this week's events that we know are scheduled that could move it, such as influential earnings and or tariff deadline on Friday, or any of the economic news from the FOMC meeting or our Friday jobs report. But there are some ways that we can manage in here. The main way is sticking with existing longs that we've been talking about for a few months, right? And holding them unless or until we see a sign that that things are done to the upside. And we'll talk about what those will look like in just a little bit. But as far as adding here, we want to see some really crystal clear sorts of setups, really sort of three-wave corrective counter trend pullbacks to measured support levels to turn things up. That's what we've talked about for a while. And one of them that we talked about before we got above the Voodoo snow line last week was that if we could get above the snow line and see a really nice sort of zigzag move down that held support at or above the snow line level, that would be a suggestion that the market might have further to go. That's a trade we took here in the Mastery, adding to our existing long positions by buying some S&P futures, not right at that test of the snow line on Thursday's close, but early Friday when we saw the start of that turn up following what was left looking like a counter trend pullback. And as we continued up, taking a profit on a third, while breaking the snow line wouldn't necessarily tell us that we're having that bigger pullback now. All it would do is just sort of take that reason for looking for immediate upside off the table. But for things that were added here Friday morning, breaking the snow line is a spot to take at least that exposure off. If we get future three-wave counter trend moves into a support level that starts to turn back up, that could be a reason to try adding yet again. But again, being very cautious right now, holding that snow line focuses our attention on the upside. But as we've also seen reasons to view things as stretched, making sure that we trail things pretty closely. Now, on a bigger picture basis, there are a few things that we can look at here, particularly with respect to the portion of the leg up from this May 23rd low. The pullback into that low is the biggest pullback that we've seen in a few months. The biggest pullback since that low is this one right here. So one of the things that would be a warning that maybe a portion of this move up is complete is if we can see a pullback larger than anything since this May 23rd low. So if we measure from today's fresh new all-time high in the S&P 500, a move would be symmetric to this prior decline that tested the fire line and held down here at 62.85. That's also approximately this this swing low from, I think, last Tuesday it was, right? So breaking that swing low, breaking symmetry, and becoming the largest pullback since May 23rd, I think would be a suggestion that we're in the next pullback, and that may give us an opportunity to pick up some exposure lower, looking for a larger counter trend pullback, perhaps towards this tree or this fire line area, but somewhere a bigger zigzag down that starts to turn back up. Look at using that as a place to get more exposure. Otherwise, we're just sort of nibbling and trailing pretty closely on small pullbacks while running larger positions. Again, I'll worry about protecting myself against a decline in those larger positions from lower that we took back in April on a break of this 6280, 6285 area. Until then, I'm just going to keep letting this thing go until something breaks, right? For exposure from high levels, it's only going to be a small break that needs to take me out. A bigger break to take me out of larger exposure. The warnings that we're seeing are just telling me that I need to trail up pretty closely on some of these positions to pay attention to any sign that we might come back down. But for now, holding support above the snow line, there's nothing to worry about yet other than just those vague warnings, and just process them by knowing where our exit is, always keeping an eye on the door in case we need to make that hasty retreat, and just waiting for the signs that we need to do so. That's what I'm watching here in the market. I'll be back with you again for these Voodoo videos next Monday. And until then, as always, good trading.